Hey guys, it's Willie from SuertePanda.com. Welcome back. Happy Lunar New Year to anyone that happens to celebrate it. It's the year of the ox or the year of the bull. So we'll see how this year goes, trading wise and investing wise. So I've talked to a few family members over the past few days, and I just wanted to kind of maybe share some of the things that I talked about with them. So I think the one of the things is a lot of people are getting interested in options trading, and one of the usually like the intermediate type of traders are starting to ask a lot of questions regarding strike selection. So I thought it might be helpful for you guys as well, to kind of share like my thoughts on like how do you balance probability and profitability, and how you can choose your strikes. It really depends on a lot on your personality. Or are you more fearful, or are you more I don't want to say a gambler, but I think like people that like to maybe like take a chance. So people that like to take a chance are probably gonna wind up buying more out of the money options, whereas people that are like a little bit more maybe a little bit more fearful, they'll probably buy things that are more in the money, so that if there's a correction or some big crazy move to the downside, at least you have some protection. It's not going to be perfect, and really again it also depends on your outlook for like the particular stock that you're trading. So I thought it might be helpful to maybe show you on the platform on maybe like a like a crazy stock, and then maybe like something that's a little bit more boring. So let's go to my Tastyworks platform, and I'll show you maybe like two examples, and then like how you can think about it, because there's no like perfect like you have to buy like the 20 delta option. That's like the perfect solution for all traders. That's not the case. Like it depends on your personality, and your like your risk tolerance, and then also your time frame. So why don't we just jump into like my Tastyworks platform, and we can continue from there. All right, see you there. Options, or a net buyer of options. So to be a net seller of options, it's relatively easy, because you can just follow the Tastywork mechanics. So you'll generally pick like strikes that are like around like 45 days to expiration, and then they're also pretty flexible, within like the 30 to 60 day range. You can also sell options depending on what the implied volatility is like. So generally, with higher implied volatility, you can actually sell options that are like 30 days or so, and then take it off with at the 21 day mark. Or if like the implied volatility is kind of low, you can go all the way out to like the 60 days. So in this case, it would probably be around like the April strikes, where you can like start selling options that are closer to the money, because like the implied volatility limits like what kind of premiums that you can get. So first, I would suggest you kind of like decide for yourself, um, whether you want to be a net seller of options or a net buyer of options. Generally, if you're a net seller of options, um, you're gonna have probability on your side, but the profitability might not be as great. And then also the reverse is true. If you're generally a net buyer of options, your probabilities aren't going to be so good. But if you pick the right direction, and you have your timing correct, you can make a lot of money. So that's always like that delicate balance you have to strike between yourself for yourself. So let me just show you two examples to kind of show you what I'm talking about. So for example, I'm going to look at MicroStrategy. I've talked about this stock before in a previous video, so you can probably just check it out at your leisure, when you have the time. So I kind of have a high class problem with the stock. Originally, I was trying to sell a what I guess what I would call a covered strangled on a leap. So I bought a January 2023. At the time of the recording, it was actually at the money, or just like slightly out of the money, and now it's in the money. So it's a good problem for like the long option. Um, but it's actually bad because I capped my gains. So in the February strike, I sold the 940 calls because I didn't think the stock would run up so much. So I limited my gains unfortunately for this particular trade, but it's not too big of a deal because I guess I could do it again. Um, but I would have to pay a little bit more if I wanted to do something like that's like at the money now. So for example, like now if I wanted to do like a similar trade, um, I would have to buy like the 1040 options. So let's just see what that's like. So it's like, oof, it's like 50,000. So I'm not gonna just outright buy because it's too expensive. I'm gonna probably look to sell like I'm gonna go all the way out. That's the good part about if you have like a high implied volatility rank. Um, I guess like go all the way out to like the 1900 strike and sell something against it. So it's still pretty expensive. If you have a cash account, this is roughly like $46,000 or more. Um, if you have portfolio margin, you can bring it down to about 25,000, but it's still you know it's, it- it's pretty it's pretty um, it's pretty expensive. So then what I could also do if I'm feeling like very bullish, I would probably sell something like I would also probably pick like a out of the money put to sell against it to kind of strangle the position, if you would. So my estimate of the fair value is actually interesting because I'm thinking MicroStrategy should be worth around like 675 because Bitcoin is worth roughly 48,000 right now. Uh, by the time you read this, it'll probably be like 50,000. Sorry. By the time you watch this video, the price will probably be like 50,000 or more. So I think like Bitcoin has already had a good run up. It's probably due for like maybe some consolidation. I don't think it'll go down too much because there's so many people like that are interested in it now, and it's not just like small time speculators. It's actually uh, like corporations now, so it's getting kind of nuts. But it's a good thing. But I think like MicroStrategy, it's at the time I bought it, I thought maybe okay, it was close to fair value, so I'll take a shot. So that's why I bought something like that's like almost at the money. And I think like right now, I think it's run up like a little too much. But I think like the fair value could be somewhere around like 660 or 670. Um, so I could sell a put against it, and that'll also bring down potentially bring down the cost. But I guess like the way the margining system at Takes Two works is it's actually increasing like the cost of the trade because they probably think that this is one of those stocks that like it's almost like to them like I'm almost doubling up on the stock. They don't see that. Um, I don't think at expiration like it'll breach 660 or 1900, but I could be wrong. And so from a brokerage point of view, like they think like, well, this is kind of risky because like I have potentially if I'm assigned, like I'm out like $66,000 of money because like I'm willing to pay 66,000 that because I think that's the fair value of MicroStrategy. But if Bitcoin tanks, you know that throws like my estimate off. So it's a tricky um so it's a tricky problem. Um, So generally, if you're a net sell of options, you want to try to sell like out of the money, because this gives you um, like probabilities on your side. So for example, like this put that I'm willing to sell, you know, it's only at the time of like this recording, there's only like 10, roughly 10 deltas. So I have like a roughly 90% chance of being right that like, I'll get to keep like this entire like $2,000. And then also like consequently, like the option that I'm willing to sell. I mean, this is like pretty crazy. Like they had to open up like the 1900 strikes like on the March cycle. And there's already like 275 like open interest over here. So it's pretty interesting trade. But again, like this is not financial advice. This is just like me, like maybe potentially being like a crazy person. Um, and like you have to kind of balance out like your thought process, like what you think about the future on like not just the stock but like the overall environment. Um, so this is I wouldn't consider this a YOLO trade because I think probability is on my side. So like the delta on this call that I'm willing to sell, it's a 17 delta. So if you do 100 minus 17, that gives you your rough probability of success, which is like 83%. Um, so potentially I can keep $5,000 to offset this $50,000 of premium. So like that's like 10 months worth of trade, and I could potentially get a free trade if Bitcoin continues to do well. If it reverses, then I'm kind of hurting because that's like $66,000 of risk that I'm willing to take on. And then plus like the the option like over here that I'm willing to buy for like $50,000. Um, it's I'm controlling $104,000 worth of stock for roughly 50,900. Um, and like I would actually think maybe a little bit more about like putting this trade on because right now like 1040 is way off of like my estimate of what Bitcoin like MicroStrategy's holding of if Bitcoin is I think it's worth roughly 66,000. But again, I could be way off. Again, I think if people are thinking that Bitcoin will shoot higher past 50,000, the people um, that are willing to pay, 104, it's crazy, 104,000 for 100 shares of stock. They could be right. So who knows? And plus, don't forget, like I'm buying it all the way out to January 2023. So within that time, the more time you have, the more like the bigger like volatility can work in your favor. If you're a buyer. But what's a little tricky about this trade is that the IV rank is high. So I generally don't like to buy options when it's this high. So like I'm probably gonna hold off. Generally, like what you want to do, like if you want to buy options, like you want to wait for like the implied volatility to either be at a low point or I guess like if you think it'll go down a little bit, like you wait for like the consolidation point and then buy. Because you think like volatility could expand some more. So I mean, realistically, I mean, like this is one of those crazy stocks that like the IB ranking easily go from 84 back to like 100 again or more. Just because like the way like it moves. So like why would you pick like in like I guess like people are asking like when would you go in the money? When would you go like at the money? And then when would you consider like out of the money? So it depends. Like I talk to other traders and like right now they're saying that because we're in the middle of a crazy melt up and like people are willing to do all types of like crazy gambles. So I guess if you're like the gambler type, or if you're like the YOLO type, you can think about buying like, instead of selling, you can actually buy it, like the 1900 strike call, and do the reverse of me, and like say you can actually buy for 3800. I mean, there is a chance that it could um hit 1900, or even go past 1900, because they've been open up like higher and higher call strikes, um and there's probably a lot of like call skew. So like if I take, let's see, just for curiosity's sake, it's roughly $3,600 for a 17 delta call strike, and I want to see what this equivalent. Okay, so well, they're actually pricing in like more put skew, so people are probably more afraid of the downside. Because if you look at the equivalent 17 delta, like the mid, let me just see what the mid price of this is. Uh, they're willing to pay like 4,800 versus like the 3,600. But they could be, people could be wrong. I guess if enough people like are willing to push like MicroStrategy, or if they're really bullish on Bitcoin, it could happen. So that's why, because don't forget, when you're out of the money and you have like only like 34 days left, uh, like you also have like the gamma effect. Gamma is the second derivative of delta, so like when like the less time that you have, like the bigger impact that you get from the gamma, and then also potentially like volatility. So you have like kind of like a tag team going on, and that could push your prices like even way past like what you think could happen. But again, the probability of that happening is not as good, because like if I'm selling, I have an 83% chance of it happening. But then like if you're a buyer, if you're on the other side, you have a 17% chance of it going higher. And it really depends, like the profitability depends on how far and how crazy the move could be. Potentially, we could see like even more crazy moves. So like this, like the money that you're willing to pay out over here for this call, the $3,600, it could very well double to $1,700 depending on how far um, like the price of MicroStrategy goes past like 1900. So that's like the trade-off that you want to like kind of keep in mind. Um, and then like maybe on the opposite side, another stock that I've been looking at, but more like on the boring side, is like Kimberly Clark. They make like toilet paper and tissues and that kind of stuff. So like you have like the opposite of, right. You have like IV rank of 9. So like if I wanted to sell options, like it's not. I mean, look at this. Like look how skimpy like these like options are. Like even if I sell like the 20 delta put, like I'm so like only giving myself like $7 of movement. So I'm gonna get it like $140. But like again, like there's different products for different people. So this is not like, I don't think it's too crazy. It pays a dividend. Like it's not gonna like, most likely not gonna move very much. Um, so like selling options here, or like right now, like it's not very appealing to me. Like if I wanted to, like this is the type of stock that I probably wouldn't mind. Like if I'm just holding it for like maybe like modest appreciation. Um, this could be something that I could consider. Because like the same thing, like I can buy like this option here, this slightly at the money, um, or let's do like a in the money. Like how far in the money would I like to go? Um, so I remember like a rule of thumb that like someone taught me, that like you want to try to buy like 90 delta if you wanted to do like a deep in the money like cover call, because that's more for like an income type of strategy. So like based on like those old methods, like I'd probably buy something like over here, like either the 100 or the 105 strike, because that gives me like roughly like 90 like a 91 percent chance of being right and a 90% chance of being wrong. So if I do this, so if I do 3,000, and then if I sell the out of the money strike at like 45 days, so I guess like right now, as the time of this video, like that's the April 1st um, strike. So based on like a 3,300, and you sell what is this, 75? Ideally, I would want like a little bit more, but you know, do at the mid price. If I sell the 141 strike, I have like a 80, almost like an 80% chance of collecting the entire premium over here. Uh, so just for sake of example, that's roughly like $92. Um, or like you know like roughly $90 of a option premium. And then if you do it enough times, like you know that you can make up the cost of that in the money, or most of the cost of the in the money call, and then the you know that doesn't even take into account like potential price appreciation over time. Um, because the cumulative collect is one of those like I guess like what I would call like a steady Eddie type of stock. Like it's not gonna move too much. Like I think over time, like it'll probably appreciate. Um, Yeah, I mean, as you can see, it's kind of like flopping around. I guess like between this range. So if you buy now and then it heads up, like you have both capital appreciation and then like whatever premiums that you can collect over time um, on the 45 days like cycles, and then like yeah, after roughly like 21 days, like hopefully you can collect at least like $45 um, on that in the money like covered call. Um, So I think that's about it. Hopefully this wasn't too long. It wasn't too boring. I guess like if you want more like illustrations or examples of this, like yeah, just let me know in the comment section below. Or if there's other uh, options or you know trading related topics you want to know more about, feel free to let me know. Because everybody has like their own like preferences. So like you kind of want to um just look at like the current market environment and then see like how you feel about it and then like pick accordingly. So for example, like if you're uh, you know you feel like the world is kind of crazy right now and you want just like maybe like more boring stocks, you can consider stuff like Kimberly Clark, you know like maybe um companies that sell like essential type stuff and like you could do like in the money buy in the money maybe like a leap call and then sell like um out of the money calls against it, um or maybe if you're just like a YOLO person like and you want to just like go swinging for the fences like stuff like MicroStrategy, you know y- it's all it's your call, no pun intended, like you buy out of the money uh options and you kind of like you know hope for the best and then like maybe you'll get lucky a few times, um and then you make some decent money in a short amount of time, but again like you have to balance out like the probabilities, so you know everybody has like their own preferences and like their own methods, so hopefully you can find something in this video that appeals to you and then go from there. Again, this is not financial advice. This is just like more educational material. So please let me know what other topics you would like me to cover. If you can consider giving it this video a like and maybe subscribing, that'd be great. Otherwise, I'll see you in the next video. Have a great one, guys. Thank you.